What's up, everyone? It's Scotty with MoneyVest. So today we are going to be talking about NIO, and NIO is actually finally, it looks like William Lee has been watching my video, so that's good because they are finally now focusing on efficiency and profitability. That's exactly what I wanted from NIO. Okay, it's been absolutely, how should I say it? It's been a nightmare, right, being invested in NIO, even though it's a very, very small position for me and it's been a very small part of the overall portfolio, like less than 1%, but it's still a losing position, right? And I don't really want to lose money in the markets if I'm investing actively. And look, I'm going to be honest, right? NIO has not done well. It has not performed well over the last couple of years simply for the sole reason that they've focused on too many things at very, very short amount of time. Instead of focusing on profitability and becoming a self-sustainable, viable business long-term, they have tried to focus on too many things, tried to implement or execute or experiment too many different things, and what they lack is true focus and actual execution towards profitability. And it looks like we are starting to turn the corner towards that. So that's exactly what I'm going to discuss in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like. I would really appreciate that. Subscribe to the channel if you haven't already. And the link to our Discord and Patreon is going to be down below if you're interested in joining and, of course, being a part of our MoneyVest community and, of course, getting access to all the members-only videos, trade ideas, trade alerts, find out exactly what I'm buying and selling, options trades, and of course members only private videos, Excel spreadsheets, including intrinsic values, S&P 500 valuations, volatility summaries. Everything's going to be included with the link down below. So NIO provides the update on the November deliveries. They came in at just under 16,000 deliveries. That was up 12.6% on a year-over-year basis. They also delivered over 142,000 vehicles so far year to date in 2023. Of course, December is going to come out in the first week of January, and that is up 33% on a year-over-year basis. And cumulative deliveries are approaching close to 500,000 as of November 30th, 2023. So, these numbers are pretty strong. It's very good that NIO is selling more vehicles. They're doing a lot of volume. They're increasing 33%, on a year-over-year basis when auto sales have been, somewhat stable, somewhat moderately slowing down. It's a pretty solid year in terms of deliveries. And obviously that's translating over to very strong revenue numbers as well. But it's after the revenue numbers, when you come down to the bottom line profitability, that's when the real issue begins. And Chinese EV maker NIO jumps 4% after reporting narrower than expected losses. So again, you'll notice the revenue came in at just over 19.1 billion Chinese yuans, or 2.7 billion US dollars. That was slightly lower than what the expectations were. And loss per share came in at 2.67 yuan per share versus 291 that was expected, and that was smaller than the 3.71 per share loss recorded in the second quarter of the year as well. So quarter over quarter, a little bit of a narrower loss, and of course versus expectations, we're also seeing a bit of a beat on the numbers. But it's kind of like a funny thing, right? So when you look at expectations, you kind of forget what the company is actually reporting on an absolute basis, because at the end of the day, right, NIO might seem like, oh, it beat earnings. Yeah, it beat earnings, but it still reported a loss, right? So I think we kind of forget what the actual situation is with respect to the actual loss per share. Now, if you take a look at revenue, it did increase 47% on a year-over-year basis. So that is a very, very strong growth. And this right here is where I really liked about what William Lee said. He said that investors are focusing on the Chinese electric maker's ability to be more disciplined in its spending as it charts a path to profitability. Investors being us, right? Been voicing this concern for many, many months. And NIO CEO William Lee reiterated the company's focus on being more efficient. And he said that we have identified opportunities to optimize our organization, reduce costs, and enhance efficiency as well. So that is exactly what I wanted to hear. And the next step is going to be implementation. It's going to be execution on how they're going to optimize their organization. They're going to reduce cost, enhance efficiency, and more importantly, execute towards profitability. That's very, very important. And the company is planning to cut 10% of its workforce last month, citing fierce competition. And of course, we've got Xpeng, we got Li Auto, we got BYD, we got Tesla, we got so many players in the Chinese market that NIO certainly needs to bring its A game if it's going to survive the long term, right? That's really the whole idea. And focus on efficiency this year. Chinese EV market has been the stage of a price war sparked by Tesla, which obviously has forced car makers to slash vehicle prices and put pressure on margins. NIO's gross margins were 8% in the third quarter, down from 13.3% in the same period last year. But the CFO did mention that the actual 2024 target vehicle margin could be between 15 to 18%. And the CFO, Stephen Weifang, said the company's vehicle margin, which was 11% in the third quarter, can rise to 15% in the fourth quarter, helped by lower material and component cost, as well as battery manufacturing capacity as well. So when you take a look at the balance sheet, the total cash that NIO is sitting on right now is going to be a little bit over $3.3 billion, and short-term borrowings are going to be $662 million, and the long-term borrowings are going to be $1.6 billion. So that's about $2.2 billion US dollars, with $3.3 billion of cash sitting on the actual balance sheet, with long-term investments also sitting at $758 million. So when you combine that, we've got $4 billion worth of cash and long-term investments versus short-term liabilities, and of course short-term debt is sitting at just under $2 billion. So that's actually a pretty good, pretty decent balance sheet. Total current assets also do exceed total current liabilities. So that is also very good, and total assets obviously do exceed total liabilities as well. And this right here were the numbers as of the September 30th, 2023 quarter. $2.6 billion US dollars worth of revenues. Gross profit coming in at $208 million, which again is not the best margins, but it's something. And of course, we've got a net loss of $624 million, and a majority of that coming from R&D and general administrative expenses. So research and development and SG&A combined are a little bit over $900 million, or close to $1 billion, might as well round that figure up. They're spending about $1 billion in overall operating expenses. So that number needs to be more efficient and needs to be well allocated and capitalized so that the company can actually generate operating income, and then we'll worry about net income eventually. But it's really, really, really going to come down to how the company operates moving forward, and how they're able to execute towards, efficiency and of course profitability. Because for me, as I mentioned before, for any stock, any company to be a much bigger position in my portfolio, I need to be convinced. I need to have that conviction that this company can indeed be profitable. It can execute. It's got the right mindset of focusing on profitability so that it can be self-sustaining and viable, right? Think about it this way. If a company can sell just one product, that's it, right? We don't need to go after 100, just one product, and do it well and be profitable and generate a lot of cash flow and earnings. All the other ideas, all the crazy ideas can always be implemented in the future. We just need to do one thing and one thing right. That's it. Everything else will follow along, but I think it's the philosophy that we need to implement. If I were running NIO, that's what I would be doing. But anyway, going over to the technical analysis and the charts, you'll notice that it's obviously been on a very, very significant sell-off. It's just pretty much trading at a new 52-week low. This right here is the downtrend of lower highs and lower lows, and support level is going to stay put inside this green rectangle. We did see a little bit of a rally yesterday, but of course got sold off intraday. So up 1.5% yesterday, up 2% pre-market right now. The next target really is going to be 943. We do have a little bit of that positive divergence, so that bullish divergence forming right now. So we're going to continue to monitor how NIO sort of technicals play out, but that next resistance is going to be all the way up to 943 to as much as $10.50 for the company as well. So very, very nice potential opportunity for NIO to have that breakout to the upside and get up to as much as 943. That's going to be that next resistance, with the massive support sitting right over here at $7 per share. In case we get a breakdown below $7, then I think it's going to be pretty unfortunate for us to see it possibly down to sub 6, maybe in the 550s for NIO, because that's going to be that previous resistance potentially acting as a new support for the company as well. But this is really where we are with the NIO: lower highs and lower lows, consistent downtrend and selling pressure. Support level is going to be in the low 7s, resistance all the way up to 943 for this company. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only videos, Excel spreadsheets, intrinsic values, trade alerts, Discord channels. Everything's going to be included with the link down below. And as always, happy investing. I'll see you all in the next video.